Ladies and gentlemen of the crypto space, we're live on a Wednesday, January 15th at 11:30 a.m. So the thought this morning is obviously the snapback, and folks will talk about the reports, and the reports aren't what caused the snapback in the market. Now, you could say that the reports are a manifestation, or rather trigger the bond market and the dollar to exhibit market directional behavior, and that is what causes risk assets to move. Risk assets will try and front run what it thinks the dollar and the bond market will do. So the report is loosely coupled with market behavior. Um, the inspection to have is to think in terms of cause and effect causality. What causes what? And you'll never know that have an answer to that. But the point is to understand that that's the way the world works. So we have the 10-year Treasury on the screen, and this is the largest daily drop in yield. I mean, there's no handle body close currently, but we're looking back to November 24th. So this is a big move in the market. Someone, some actor, or a group of actors, or the system is putting pressure on folks to buy duration. United States government debt, long dated debt. And that caused a very nice drawdown in the DXY port. Look at that daily candle. It's in the green for today. The dollar vis-a-vis the DXY inspection is in the green for today. So today's Wednesday. We were at like 99 and change thousand on Bitcoin. You're now less than 99. The strength in the dollar is overwhelmingly inversely correlated to the price of the risk assets that we like to look at. Nasdaq, S&P, that's another story, but if the dollar keeps rising for today and ends in the green, 91 and a quarter or 90 and a quarter, 109 and a quarter, I'm just saying, or any higher than where we are right now, you'll see risk assets come down a little bit more. 1%, 1.5% Nasdaq, take a little bit off the top. It induces that what occurred today question. Damn, look at the DXI rallying as we talk. It was at 109 and a quarter. Now it's at 103.5. That is a hell of a candle. And that is very comparable to maybe what we had a couple of days ago in the 7th. That was it's a tweezer bottom by any inspection. These are daily candles. What do they mean in the grand scheme of things? But the invert, it's a hammer candle. It tends to be directionality reversal. So if you are coming down for 2 days, you have a hammer. It indicates it tried to continue to sell down, but folks bought the dip and bid it up. On the move today, curved right into the 50 SMA from the downside, 92 and change, almost 93 cents. Nice to see, but unless the dollar presents weakness from here, you expect sideways chop, and sideways chop in these types of risk assets is a meaningful amount of volatility. You're talking 10, 15, 20% price swings. So that's where we are. It's not convoluted. It's not, I don't know what's going on. There's an overwhelming inverse correlation between the relative value of the dollar and risk asset pricing. And that's similar to what is to be said about the move indicator. Move indicator is actually in a promising position from a daily perspective. Looks like it has found resistance below a variety of long-term moving averages. Now, that doesn't mean much from a technical standpoint, as this is a volatility indicator, but it could indicate that on average, intervention from all central banks around the world are having an effect quicker, such that shorter and shorter term moving averages are holding as resistance every time volatility pops to the upside. And it's a little bit more promising actually on the weekly. This we did have a big breach from the downside to the upside. It's a hell of a wick in June of this year or last year. This is two candles of resistance interacting from a weekly perspective with this moving average. Ultimately, the policy of everyone, every central bank around the world, they have their domestic policy, but they also have an international policy because that affects their domestic policy. So they need to control the volatility of the United States Treasury market because that is what is used as backing for literally everything on the planet, including the dollar. So, as we've said for a long time now, we are waiting for this to breach lower lows meaningfully and have a continuation to the downside, and that gives you your cycle. We are closer than ever to our bull market cycle. We are not there yet. Albeit we do have red guppies from a weekly perspective on the move indicator, but we are very much in the green on the monthly inspection. Let's look at the DXY from a monthly. Look how green we are. You have rips to the upside. We've had significant appreciation of assets like XRP, of a lot of stuff on Salana. We've had a repricing of basically the entire crypto space, multiples, 2, 3, 4, 5x. Even Curve is up 450%. That doesn't mean there's a bull market. There's a difference between what we've seen and what a bull market is. What we've seen is a repricing of assets to normal, to a decent pricing. They were oversold in 22 and 23 and good parts of 24, not Bitcoin. So there was a mean regression to the upside. Does that make sense? Mean regressions happen to the downside as well as the upside. That was a big snapback, and these snapbacks don't happen over days. These structural market wide snapbacks take months, if not a couple of years. So we didn't finally get to decent, not Bitcoin conditions until the middle of 2024. Yeah, it started to have repricing at the beginning, and we started to see signs that capital was willing to allocate to anything other than Bitcoin, obviously starting in January of 24. But this is a very interesting start of the year, very consistent with the talks on social media, with the inauguration narrative. Got the crypto ball. Okay, okay. These may be the last innings of dollar strength. Policy kicks in, change in policy kicks in, and we get the dollar to come down. And that's where you get your crypto bull market. Look at the dollar from the monthly perspective. You could barely see anything. So this is actually what I look forward to. At some point, we're going to have significant dollar depreciation because look at these green guppies on the DXY for going back until February of 2015. We didn't get any red guppies on the monthly perspective. A little bit of gray guppies, which is horizontal trending, and this was our double top in Bitcoin in 2021. As you can see, the two arrows there, it's pretty unambiguous. You go into the weekly, and there's your guppies. But the promising takeaway, one, is that we haven't seen a quote unquote crypto bull market yet. You will know you're in a crypto bull market when at least the DXY turns gray on the weekly. And that is why we had such a damn rally. in 2024. Look at look at that. That was a meaningful leg. Also had a nice leg in 2023. You see gray on the guppies on the DXY from a weekly perspective, you're going to have very bullish conditions. You see red. You see that first line of red, and that's game on. And there's where everyone like cash is trash. You don't want any cash, and you got to own stuff. We're not even close to that right now. And you don't want the volatility. You don't want all of a sudden it turns gray, like all of a sudden it's at 105. You got some systemic event going on. So you want is breath to run out and a directionality reversal. And you want to start to see lower highs and lower lows from a daily perspective, bleeding into a weekly perspective. And then we can get to the speculative monthly perspective, of which we haven't seen red in the DXY guppy since 2012, starting in 2004. Decades. That's 2 decades, ladies and gentlemen. This kind of market condition for the crypto markets would be weird. And it would be beyond weird. It'd be weird square because really weird from a weekly perspective is the red guppies, and those are your bull markets in historic terms. We start to see red from a monthly perspective, and that'll be weird squared. You'll start to see repricing of things like don't talk in terms of hopes and dreams, but you'll start to see repricing of things on a global scale for where market actors are starting to see these as actual businesses and they start to get integrated into systemic practices, business operations, so on and so forth. That would be a structural transformation. And you only go through that every couple of decades. So coincidentally, have a very different administrative policy coming into office. We have the dollar crushing the crap out of China. I mean, China is literally in an economic cascade right now. South Korea doesn't look so hot. Japan, the yen, oh dear. We'll see what happens. And that's always a statement because we watch this data on a daily and a weekly, from a weekly perspective. But at some point, you start to see the structure of the system changing, at least from a short term cyclical perspective, but then more so in a long term secular perspective. So I think that's where we're at. We haven't seen the cycle, but when this cycle starts, we're going to probably be able to entertain not just a cyclical trend shift, but a secular trend shift. And that is why it could be a very, very interesting cycle. The start of a secular trend shift, never seen anything like that. And, you're talking 20 years ago, that's half my life. I was naive and young and I knew nothing. And now that I understand the way the world works, we're about to experience a different world because when you have a secular trend shift in the behavior of financial markets, it is perceived at the individual level as a different normal, a mode of operation. The behavior of people changes because the structure of economics changes, which changes the structure of society. So anytime you see someone say the bull market's almost over, or the bull market's starting, or the bull, I don't fucking know what people are saying, but I hear a little bit of chatter, and there's the data that is so clear that nothing has started, barely even a repricing from a mean regression to the downside through 22, 23, and good parts of 24 for not Bitcoin. Bitcoin repriced back at the end of 22. Different narrative for Bitcoin. But we talk about crypto fintech businesses, which is a conversation unto itself. You need to delineate between different conversations. You can't have a conversation of Bitcoin and have it be applicable to fintech businesses. Each warrant a different type of conversation and different considerations. And it's not versus. Anytime you see someone saying all coins compared to Bitcoin, and they're talking in terms of Bitcoin's monetary properties or immutability, decentralization, it's not even like an apples to oranges conversation. It's like an apples to a can of seltzer conversation. It's like, what the fuck? Do you guys have any idea what you're talking about? It's like a cell phone to a donkey. It's not even in the same species. So respect the conversation and understand that everything deserves its own context, its own details. And anytime, this is a great way when you're looking at social media to see through bullshit. Anytime you see someone bleed over that conversation, the obvious conclusion is that they don't know what the fuck they're talking about. That's not from a derogatory standpoint. That's from a rationality standpoint. Everything deserves its own individual conversation. Look at that DXY with the volatility 109.35 back down to 109.2. Wow. Go back to the daily for a second. I mean, we're at the top of the guppies. It was a breach to the downside, not even close. And I through the teal guppies. I mean, literally, you have 100, 200 cross. By the way, that is a 50 SMA, 200 SMA cross. As a golden cross back in November 29th. This is not pretty. So you have your sporadic bull presentation, expression of the crypto markets when you have your drawdowns. But god damn it, the drawdown smacked into the 200 SMA in the weekly. We're not even, nothing has happened. There's no push through meaningful moving averages on the dollar. These are your two legs. November 20 of 2023 and July of 24, you had very nice moves in the markets. This is why. Even had gray guppies. You had gray guppies for both of them. And this was obviously a big move for the Bitcoin. Q4 of 2022. It started to reprice. You found bottom at what, like, what was it, 16 grand for Bitcoin? Mean regression from the downside back to the upside, repricing things into non stupid territory where people start to actually have a conversation about what these systems actually are. Thank you for listening to my opening monologue. Let's do some commentary. If you're on X or on YouTube, please feel welcome to ask any questions. More than happy to talk about anything on your mind. Tapsies is in the house. Joshua, howdy, howdy. Arrow, good morning. Teddy, Gazika, Sergio, good morning, Cap. What do you think about participating in preset? Yep, I was just, well, that was there. So we always end up talking about what is a consideration in context of the stuff that and therefore most of us are interested in. So I was looking at some of the data this morning, and coincidentally and fortunately, I have this up still. Uh, so stablecoins have blown out on Solana, which is crazy, approaching Binance Smart Chain territory. Note, Solana volume is down 10% week over week. I'm not going to switch screens for the time being. So the takeaway is something we started with at the beginning of the stream. Causality. What is causing what? So typically, stablecoin inflow should be a precursor to volatility or favorable volatility, increased volatility. What the hell is the stablecoins going to be doing on Solana? Given that there's no real rich fintech business to engage in, it's not much debt on Solana. But you have a stablecoin inflow that could potentially facilitate increased debt taking. And now you have of the E33 exchange, which isn't coming for 2 weeks. I think they said first week of February. So what is the consideration there? Maximum risk reward with regard to pre-sale considerations. The potential for a E33 exchange on Solana can be enormous, especially with these kinds of stablecoin inflows. You're at Look, I switched to Binance Smart Chain and I can't get back. DeFi Llama's been bogged down significantly all day today. It was a little bit over six, I think. $6 billion. It's a lot of dollars. So, from a speculative max risk, max reward standpoint, I think Solve is going to be very interesting. Max risk, it's a brand new protocol. You have no idea how the hell they ported the contracts over to Solana, Rust. There's a significant risk that comes along with that. Max risk, max reward is the only way to describe it. Just over a tick over $6 billion once it's loaded, and we know there's a great deal of degeneracy on Solana. I just think Solve could really go wild. Now, bear in mind, you could, folks, can you please add to the comments? I don't recall, um, but I'm pretty sure we get a fat airdrop, or at least an airdrop. I don't know if it's fat or not, but we should have some exposure to Solve vis-a-vis our kingdom and whatever the hell else they added into their snapshots. And that's the whole point of having capital available for an allocation, a speculative allocation that is respectful of risk versus reward. Of all things right now, this is pretty damn max risk, max reward. Like, you know, I'm saying it like that because that is literally what it is. It could be a lot of reward owning a right size position of this unreleased protocol. Freaking Solana with a 10 8.21% increase in stablecoins week over week, given the composition of the actors on Solana and what they do. Um, so how much risk do we take? I don't have answers to that, and everyone has to come to that individual evaluation unto themselves. Shadow also on Sonic. Sonic volume is up meaningfully. Stablecoins are not yet inspectable. This is all nascent, meaning it just launched, and we do not know what the hell is going on. Sonic has received a significant amount of capital inflow. Aside from Danny's work, and what the old school stuff, Spooky Swap still has a lot of traction. Solidly is on Sonic. I don't know what's going to come of Sonic in the short term. The chain doesn't, we don't have a stablecoin inspection, so we don't know how much capital is there to potentially churn. In this regard, I'm more interested in Solve. Shadow, we should have exposure vis-a-vis Ramses. Arbitrum is down significantly week over week. Let's see if we can pull up those stats. Stablecoins, Arbitrum. Was it the stablecoins that were down 10% week over week? That is crazy. So yeah, that is quite the takeaway for what's going on Arbitrum. Arbitrum is significantly lagging the market. A 13% decline in availability of stablecoins. So Solana, Base, Binance Smart Chain. I haven't looked at Optimism, but Optimism is probably still trailing Arbitrum meaningfully. But Arbitrum has significantly slowed down in market activity, or at least available capital to even potentially engage in market activity. Let's go over to volume. Let's see if we could take a peek at any of these stats, if anything loads. What? It's not going to load. All right, so that's how you measure where the potential is. You want to follow stablecoin flows, but stablecoin flows are a precursor to actual market activity. You can't do anything if you don't have capital to spend. So people move capital over and they spend capital. That capital ends up in some sort of liquidity pool somewhere, and that gets part of the churn. So that's your liquidity depth. The stablecoin the liquidity depth is the manifestation of the stablecoin flows. So Solana is probably where the action's going to be in the short term. Arbitrum is lagging significantly. Massive traction on with the optimistic superchain narrative. Velodrome deployed on Inc. as well as Sonium. That drama with Sonium is not drama. Gives a shit about meme coins, but that can bleed over into sentiment, and that can affect market actors. That is an entire story to unpack because what is Sony doing with the blockchain? Because if they all of a sudden get PlayStation having real tokens and with real liquidity for those real tokens, oh goodness, that's a crazy narrative. Imagine playing Modern Warfare and you're getting tokens, and those tokens have a trading value. And then there's a bull market in the value of those tokens, and then people are playing like mad and they're actually making money. And you got, oh my God, the freaking narrative. And the top of the law, Velodrome's on Sonium. It's just there. They launched. Sonium's live, Velodrome's live, Ink is live, Velodrome's on Ink. Kraken wants to pull a base because Kraken wants to be a Coinbase. Okay, so the narrative there is still wild. Let's go over to optimism for volume. 10% change week over week. Very relatively trivial volume. Even Arbitrum down 13% stables week over week. That's $5 billion worth of volume. There's less than $1 billion worth of volume on optimism. And that is quite interesting. Considering the decline in stables on Arbitrum, you're up 20% week over week in volume. Check out Salana. Solana volume is above Ethereum mainnet, which is understandable to a degree. Ethereum mainnet is a different type of actor, large actors that have more than less capital. It's not going to load, so we're going to have to have some patience with that. Okay, I'll move on to the next question, and I obviously have f of x I want to talk about. Anthony, good morning. Anonymity, it's a good name. I know the cap rational doesn't like wrap curve, but the price difference of Y curve. The curve is pretty attractive, especially staking return. It's offering 40% discount with a 20% return. 20% is meaningful. Now, the thing there is, for me, I think in terms of business structuring, other folks that run things through, personal, personal taxes and that kind of accounting, probably don't have that consideration and they're just looking for returns. A 40% discount is quite meaningful and 20% returns is meaningful as well. And we could likely expect these assets to increase in value, less of a discount in more favorable market conditions. Don't say peg. These assets aren't pegged. They never were designed to peg. Pegging requires active market operations. These assets don't have that. Pegged assets are like CRVUSD, money, Frax, so on and so forth. So these are not pegged assets, but there is a discount. So there could be an arbitrage opportunity, 40% discount, and curve goes to $3, $4, $5, and the Y curve closes the 40% discount gap. That is a hell of a multiple. That means you're getting a 40% premium on 500% returns. So from a cap gains perspective, that seems potentially interesting. I state for myself, I'm not interested in that kind of market action, and that's okay. Everyone has to choose how they want to engage with the market. But I can say that as you presented, that is interesting. Um, See it through. That's the most important thing. So many folks flip flop between exposure. Oh, this is going up. This is doing well. That. But if you identify that as something you want to capture, acquire exposure and capture it, the odds are that's a decent hypothesis. How much time is involved? You're probably talking months, 6 months, more favorable market conditions, which are not now. Wait till red guppies are on the DXY weekly, and you will capture that narrative that you have stated very clearly here. What are guppies? Short-term moving averages. Been meaning to ask. I asked ChatGPT, but I'm not sure if you're using the exact way it responded. Just short-term moving averages. It's a blend of moving averages. That's all it is. It gives you, so we look at the major moving averages, the SMAs, um, but all guppies are is a blend of moving averages. So that gives, so typically we see mean regressions to levels, and you also see mean regressions to moving averages. You can neglect trends for this particular point, but from a guppy standpoint, you can think of them in terms of pressure. You're significantly above the guppies, you're potentially in a premium zone. Yeah, we are extended above weekly guppies. You could see a mean regression to 105, still significantly above the green guppies. So there's a lot of pressure still to get through. We are overextended, significantly overextended, and I start to see the guppies diverge or separate. That is further overextended. So this is very uncomfortable position for markets. They have increased the value of the dollar so quickly in such a relatively short period of time. Talking in years, but that is still a relatively short period of time, that the market is, well, frankly, falling apart. I mean, China's collapsing. Do I have it up? No, that's the blend. And this looks like crap, but their bond market looks like absolute crap. In fact, the yield on Japanese debt is greater than Chinese debt for the first time in forever. Asun, good morning. Always a pleasure. Botas. Hello. TA on Velo, please. Hello. Hello. 8.8% on the daily. Note the level. Look at that level. Resistance. And that level, I draw these types of levels when I find like confluence of resistance. Resistance, or yeah, resistance, and then resistance here, breakout. You're right on that level. So I don't get surprised when we start to see a congestion of pricing around meaningful levels. You know, this is actually decent. Why? Resistance, resistance, breakout, fail breakout, support, support, resistance, flip support for a period of time, breakdown, trend, chop, accumulation, breakout, and now to the downside, you have a breakdown, but this is from a daily perspective, and obviously on a, let's say, a 3-day, you're wicking through. It could be in previous resistance flip support type of scenario. Market will tell you that. Check back in a week. Need more candles. But you go here and you have, it's Wednesday, so you have a couple days left in the week, and let's say end the week at 16 cents, and then over the week it breaks down to another 13.9. But now you're have a higher low compared to this wick bottom down at 10, and then you start to see a confirmation, a confluence of resistance flipping support. That seems quite reasonable right about here. I mean, look what Velodrome's doing. It's actually quite extraordinary. The exposure that Velodrome offers to folks, one protocol that exposes you to what? The entire optimistic superchain, including Frax, as well as Sony's chain and Kraken's chain. Oh my God. Kind of a red flag for me that Solve team is talking about a integration already before launch. Look at the red flags. The most important thing is to accumulate cash for purposes of acquiring things, but we also have to protect that capital, which means we're exercising due diligence. In my opinion, just get the product out before trying to jump on the latest AI hype. Bear in mind, they're talking to a Salana crowd. So in their Discord, it's just like one token, one token, one token, when launch, one token. When can I buy the token? When CA? When they just want a CA. They don't even want a damn image on the token. When's the CA? Man, it's crazy. Folks on Solana are just like, I want to buy this. Go up in price. It's really surreal. Red flags all over the place. Solana is a giant red flag for me in many regards. But we can't ignore the dollar inflows. can't ignore the volume, and we can't ignore the potential for a V3 with that amount of dollar liquidity and that amount of volume. That could be weird. That could be very weird. So, what everyone is going through right now is an exercise of risk evaluation. What is the risk? How much capital do you deploy? What kind of position size is reasonable considering the risk? I don't have answers for that shit. All I have is me saying that, yeah, that is something to be thinking about, I would say, because those are some of the most interesting properties in these crypto markets right now. That's the largest capital inflow into a network right now into Solana, considering what we know about how VE33s behave on a particular chain. Okay, that is something to consider. Ram, Nile, Vela, Arrow, and others get airdrop. Yay! Yay! I like airdrops. Free is good. Free is the best. So maybe 20% of exposure to what you have to these other protocols. That'd be lovely. Have a right size Velo position. So I'll be very cool if there was 10, 20% of the total capital valuation of the snapshot exposure that they'll drop. Um, and I thank them very much. I think I will. I think I'm not leaning to anything right now. I'm thinking, and that is always reasonable. I am very rarely early. Probably the earliest thing I've exposed myself. Strange statement. The early I've exposed myself to, aside from my wife, from a market perspective, is what Contango, which is actually quite interesting. It has a tremendous amount of open interest. That's crazy. It's just people farming the shit out of point, whatever the hell they're doing. I don't care. That's the whole point of infrastructure. But people are using the crap out of this protocol. 476 million open interest. And it just prints fees on a daily basis, thousands of dollars of revenue on a daily basis to the point where Kango's paying, I think this week, like 190%. Okay. I don't know. What else can I say about that? It's probably, to me, that is the most clear XYZ um, that I've acted upon in quite some time, other than maybe a velodrome. But this was a more speculatively sized position. Velodrome wasn't a speculatively sized position. When I acquired velodrome maybe a couple months ago, it was a I'm going to acquire exposure. I'm going to restructure the portfolio. It's going to be a meaningfully sized position, and I'm quite comfortable with the size of the position. It's not size like Curve, um, but it's a nice size position. I see the future of curve wrappers. I don't know. I've always defined curve wrappers as a derivative, and I've had exposure obviously when I was just figuring things out, but in quite some time, I just have no interest. I understand what they do. They suck up supply, and that's a good thing. And that has produced the price action of curve up until today. Supply today is a result of all of these derivatives in the market for these years at this point. Um, so I have zero interest in them with regard to exposure, but I don't know. Maybe convex pivots. I don't know. I'm not too interested in speculating on that though. FFX V2 is hot. It is the new hotness. I mean, leverage like this with this kind of interface, that's pretty cool. So FFX is one of the most interesting protocols in the crypto space. Probably the thing that comes closest uh, with the way I would describe it is actually Frax. The way I look at protocols, I'm like, nobody fucking understands Frax. Nobody. Albeit the stablecoin inflows into Frax chain are actually wild. It's just up and to the right. So that is promising, but obviously the price of uh, is it FXS anymore, or did they already convert everything? I don't know. That's besides the point. But the price of their asset has relatively suffered in the context of the insane shit that they're doing. It literally is It's not just a central bank anymore. They have their own chain. This is literally their own planet. This is their own market. It's their own digital country. It's kind of extraordinary. But FFX has done something similar, similar in the sense that Jesus, they are the dominant owner of Convex from a governance standpoint. Listen, if with an adequate size of cleaver, you can pass any vote on curve. That's that's what cleaver is. That's crazy. What FXN does, and the overall their X tokens and their non-liquidatable concept. This is one of the most unique protocols in the entire crypto space. The question is how to get exposure to something that nobody understands. Um, and I have chosen my exposure to be what uh, CTR dominated and Cleve donated denominated. Um, haven't been interested in the FXN position, but that's okay. I want to like I have that revenue component of the portfolio. And why did I acquire the cleaver? Governance power. So I actually have a fair amount of governance power from a cleaver perspective, and I could almost pass votes by myself. Um, and Concentrator has a tremendous amount of capital deposit, so the potential for it I find quite extraordinary, especially in increasingly bullish conditions. They don't trade. There's days that Cleaver and CTR don't trade at all. This stuff is so incredibly off the radar that it's complicated to Yes, it's literally not comparable to anything that's going on at like a Salana. Stuff of the volume on this shit is insane. I mean, literally the shit. The pump.fun shit. The volume's crazy. I mean, the pump.fun creators, what are they clocking out? $100+ million and just cream off the top every month? That's crazy. They're just taking money from degenerates. It's pretty wild when you actually look at the numbers. And it's all just coming from people losing their entire bag, their entire stack. They're just taking their money. That's fundamentally, mechanically, what is occurring. Good for thought on that matter. So I have a very high opinion of what FFX does. Their new V2 is quite unique. I don't trade much, if at all, but considering a non-liquidatable position, that could be a very interesting exposure, or at least just limited exposure, or a why not type of thing. Frankly, the user interface is lovely. Integration with a full chart experience, trading view style chart. I don't know what kind of indicator, but it looks like a nice list of indicators. Do they have? No, no guppies. So you'll still need external charting to really take advantage of the market, but for this to be integrated, nice presentation of current exposure, nice simple UI for taking and exiting positions. Um, what else can I possibly say? I have my exposure to the Aladdin Club. And these boys have built something that I just described earlier as maybe only comparable to a Frax, in the sense that nobody fucking understands the most complicated stuff in the crypto space. And this complicated stuff, guess what? Long term, as the market gets more sophisticated, has great potential. Hope that helps. And non, thanks, Cab. Always a pleasure. TA on massively mispriced ALD. ALD. Given that we were just talking about Aladdin Club. Can I get it? Spinner. Uh, Aladdin. There you go. There's no technicals. There's no technicals on. You can technical FXN. You can't technical the other stuff from Aladdin. Uh, This is all it's all getting rebuilt. Right, let's zoom in a little bit because that the initial decay is irrelevant. Okay, that's a nice bottom. That's a nice bottom. That is this Aladdin? It's ALD, but it's on Finance Smart Chain. I don't think so. That's Aladdin. That's not it. How do we get a chart of Aladdin? They could go to. Oh, I know where to go. Load. There you go. Echo terminal. Hey, I got now. We got a chart. All right. Nothing interesting from a technical perspective. In no man's land, you're talking about, well, here's your level. This couldn't be more obvious. Oh, I don't want that. I want a horizontal line. There's your level. So you got a mean regression. You're talking about a 20, 30% drop to get back to that level, and that would be decent inverse head and shoulders if you really want to stretch it a little bit. Shoulder, build another shoulder, head, so on and so forth. All right. It's the ultra low volume, 1.7 mil in liquidity, 7.6 mil market cap, microscopic. Literally there's no volume. Notice that. So this type of consideration for exposure is increasingly speculative compared to Cleaver versus concentrator. This has unknown where it will be. Obviously, the conversation is to refactor Aladdin Club into something more structured, um, but that's speculative. Whereas Cleaver has power today, it pays today, it's governance power through the roof today, and concentrator pays today as well. So that is something just part of the equation. Tango chart is so juicy, it's just horizontal accumulation. Yeah, it really is. Something is quite, something's there. That is very horizontal. Two obvious levels going on in the chart. It's towards the bottom end. There's so much cash flow through this protocol. From an XYZ standpoint, I mean, what's comparable? This thing's cranked out what kind of returns last week? 180, 190%. What the fuck? Um, Obviously the same portionalities in play. Revenue is inversely proportional to Tango price and proportional to total revenues of the protocol, and you get your pro rata share. So this is with its open interest remaining as elevated as it has been, it's starting to stand out more and more. What does that mean for the price? I don't know. All I know is from an XYZ standpoint, I'm quite content with it paying weekly and nobody understanding it, so it's paying out 180% of the money. So, okay, I'll leave it at that. Everyone has to make their own choices. And what did I size? Modestly sized position. Maybe it was like 2%, something like that. Modest. So a small size is 1%, half a percent. 2, 3, maybe 4, 5%. You probably still consider a modest percent exposure. So that gives you some context. Like the velodrome, 10%, a much larger exposure, which is warranted considering its moat and entrenchment in the market, free expansion to Sonium and Inc. Oh dear, what a crazy narrative. Thoughts on True Terminal and AI narrative heading into 2025? The most interesting AI narrative going on right now is DeFi.money. And interesting in terms, certainly not in terms of price appreciation, which is irrelevant. It's imperative to isolate volatility and price action from what is an actual interesting narrative. I'm not interested in social media AI that is fucking vapor. Not interested in talking with an AI to trade. I'm not interested in these AIs dropping CA addresses, CAs. I'm not interested in any of that. I'm interested in agents talking to each other and being able to coordinate. So from a crypto perspective, it's not that interesting. From a crypto perspective, the most interesting use of AI is automating protocols. Um, for AI to actually automate a protocol needs to have automatable components and considerations. In that regard, the most interesting protocol configurations are interest rates. The world runs on interest rates. The planet, Earth, humanity. So DeFi.money is the most interesting use of AI right now, as I see in the entire crypto market, which is quite extraordinary. Because this is how you find something that is mispriced. Because there's no price, there's no token. They're integrating AI to control monetary policy and build out the protocol, and they just integrated what Spectra's position. You go over here, you got Spectra exposure to money on OP, if I recall. Thought I saw it earlier. Oh, that's leverage, earn, OP. Didn't I say, yeah, didn't I say it? I swear I saw it. I'm still on leverage, earn. There we go. LPS money. So now they got their Spectra points integration for money. All right, fine. It's just a component. But that's the whole point. What I like very much about what these boys are doing is they're building out the tool set first. The only thing they're missing, in my opinion, and that's not from a development standpoint, only they know what their stack looks like, but is collateral arbitrage. Money is seamless cross chain, OFT standard, seamless cross chain. Just bridge. Money goes boom, 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 goes wherever the hell you want it to go. Three chains integrated, can go the entire optimistic stack. This could go anywhere that Stargate goes, or rather layer zero. So money is seamless cross chain. What they need is a capacity to arbitrage the collateral that'll flatten out the interest rates. Um, I mean, money's priced at $1. This thing is spot on $1. Peg deviated to the downside, but interest rates shot up, and the interest rates managed downside peg. This is literally the same thing as CRVUSD. Therefore, overpeg is not a consideration at all. Peg keepers are absolutely destroying it with CRVUSD, which is quite an interesting situation. So to answer your question, this is the most interesting protocol in all of crypto dealing with AI right now, in my opinion. AI managing protocol build out and potentially interest rates and other protocol parameters. Oh my God. So if we go over to Curve, Curve sitting at $96 million of supply, 25.49% of it, $24 million of it is Paykeeper debt. Paykeeper debt keeps it from being over $1. You can't just have downside peg coverage. You can't have a stable coin go to $1.04, $1.05, $1.10. That makes no sense. So the beauty of this is, as people, because of this debt, because of this demand for CRVUSD, that's why it's over peg. Without that peg keeper debt, this thing gotta be a buck oh five, a buck oh eight. So because of the demand for CRVUSD, now when people take out debt at 0.31%, am I reading that wrong or right? So when people take out debt and they sell it because they got CRVUSD and they want to get USDC or they want to buy some shit, that depreciates the price of CRVUSD. But guess what? There's peg keeper debt. The whole point of the peg keeper is when you have this debt to control overpeg, it can also control underpeg because now when CRV USD depreciates, the peg keeper can remove the CRV USD from the LP, which increases the price. So all of this is because of just culmination of mechanics um, that allowed the peg keeper debt to actually exist at all. But it gives CRVUSD extraordinary powers once it is available to control the peg from both the downside and the upside. Oh, this situation right now at this interest rate is fascinating because the only way to explain this situation is demand for CRVUSD. Okay? That's it. They have cracked the code for the demand for a stablecoin. How? Combination of SCRVUSD, whatever the interest rate is, if it loads. I don't know why my internet's like this. Spectra, AWA, trust, lendiness. This is the stablecoin I hold. I barely hold any USDC, if at all. The only reason I would hold maybe USDC is because I wanted to potentially, uh, as a spendable form. You can't directly spend CRVUSD yet, but USDC is a redeemable stablecoin, so debit card providers and mm, um, off-ramping protocols accept it because they could convert it to dollars in a bank account, and they have all that stack. None of this stack existed just a short couple of years ago. Quite extraordinary what you can do nowadays. Live in the crypto space. You live with your capital in crypto. You didn't say hi, but that's okay. It's all good. Welcome, welcome. Always a pleasure. Reg, no one understands Frax, nor do they understand Contango. Upper mid-curve investments are a difficult ride. Yes, but that was the equation I wanted to solve. So you have these protocols that are going to lag in adoption, XYZ. How much does it cost? How much is it paying? And how likely is it to continue to pay? The most sophisticated protocols are likely to continue to pay because they're built well and they are in demand for increasingly sophisticated market actors. And that increases the potential in the future. So if they're paying today, they're likely to be paying more in the future. So that is part of the equation. So Frax, unfortunately, has underperformed in that regard, hasn't paid well. So, for instance, Curve, I don't know, was at 3, 4, 5, $6, and now it went down to 20 cents and 80 cents. But this fucking thing has paid the entire time. Paid, 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 paid. Just has paid. And frankly, now we have enough information to say that Velodrome, Aerodrome have done very well. XYZ has worked out very well. There's barely any appreciation. I mean, obviously, aside from the early folks that are sitting on 50Xs, but it's very much horizontal. Go over to Velo, very horizontal price action. We're at a price that we were at in March of 2024, and it's only up from 5 cents to this up 300% since February, and obviously lower levels back into 23. And you go over to Arrow, and it's a very horizontal chart as well, aside from its initial leg, which was 3 cents. Yeah, 50x, give or take, up into the highs. More, Jesus, volatility on this thing is insane. It's an interesting. Look at that. Look at that regression. Look how these levels work. Look how market actors are. Resistance, support, retest, again, yet another retest, support, green candles, previous resistance. Market actors can be so predictable sometimes. Frax theory may be cool, but bridging and liquidity issues, yeah, quite bearish. Not bearish, but disappointing. And that's the reasoning why I'm comfortable with the VEFXS exposure. It's like, all right, great. I have chosen size and I got it at a good price. It went 50, 20, 30x on the money in the bull run back in 21. Great. It retraced, decent size, sitting in the green on it compared to where I got it. And whatever, it's locked. Check back in 4, 8, 12 years. Sure, it's going to be very interesting. So that's basically my sentiment on that position. Reg K Mets has so much V Cleve. Ironically, I don't have much less than him. Between him and I don't recall what it was. Let's go. Let's take a look. Not this. Here. Token Wars. Er, Beaver. Yeah, he's got 20,000 and I'm right here with 5,000. All right, he's got 4 times the amount of clear that I do, which is a lot. He's got a lot of clear. This guy's worth the protocol. But ironically, I'm on the top list here, so that's pretty cool. Top holders, yay! Let's close analytics. Let's close dollars. Let's close flows. Let's go back to maybe a Bitcoin chart as we wind down the stream. Hovering around 90,000. The XY couldn't breach or stay below 109. Anywho, let's keep it up with the comments. We'll wrap this thing up soon. Live prop firm trading. Hi, Noah. First time around. What market do you trade in? I don't trade in markets. I own businesses. It's a long story, but that is the simplest way to say it. Um, I don't engage in centralized exchanges. They're dead to me. I don't need them at all. Um, I mean, what, CowSwap? What do we use? We use CowSwap. We use, here's my exchanges. Everything, everything. This is how you engage with the entire crypto market. Mainnet, Arbitrum, CowSwap, period. And if you're on like an Optimism or wherever the hell else you are, Llama Swap, done. Full exposure to the entire crypto space. Odos, yeah, fine if you're claiming on like Ramses and whatnot. Yeah, Odos is cool, but if you're on Ramses, you might as well use CowSwap. Albeit Llama Swap surfaces CowSwap, so maybe really all you ever need is the Llama. Uh, food for thought. So there you go. That's how I engage with these markets. There's nothing else you need. Everything else is just I don't need it. This does everything and anything I could possibly need. Can you please explain the AI component of DeFi money? Yeah, they posted a nice post shortly ago, a couple days ago, where they requested that the AI adds this component, and that's how they added Spectra. The AI added Spectra. Uh, so the AI absolutely needs CAs for deployed contracts. Um, the AI could read APIs, so it needs access to APIs, and then it could do the rest. It knows, it knows React, knows how to do that. It could read an existing code base, so it needs its context. But at that point, it's like, um, hey AI, I want to add this to the protocol, and it does the work because it has access to the information it needs. Um, so, and then to top it all off, it's like discussions of monetary policy and things of that nature, protocol configurations. And what are the configurable components of DeFi money? The protocol isn't really live. Obviously, the CRV USD component is live. But what else is there? What could they potentially be thinking? What is an iteration of CRV USD? So that is quite interesting, to say the least, to the point where, as much as I am certainly thinking of exposure to solve, probably just going to settle for the free exposure to shadow. I'm also probably just leaning towards the free exposure to solve. The most interesting thing, considering the entire composition of what I own, um, is DeFi money. This is literally an iteration of CRVUSD. Liquidity is on the radar. Do I have enough capital for the appropriate position size? And two, it's paying nothing right now, meaning it's all spec territory. So we don't know how the market's going to respond to it. We don't know anything. Now, is it very interesting from a technical perspective? Sure. They definitely iterated on V1. Um, that is first and foremost what to say. But there's no XYZ, and there's an untested contracts, and they'll be immutable. So there's risk until the market proves that we can trust the contracts. So I don't know. I'm much more comfortable with things that I can measure, things that already have a degree of trustworthiness, things that have already existed in the market, and the market is telling us what it thinks of the protocol. It's much easier to make decisions when information is available rather than merely speculating on something that may or may not actually occur. A certain Llama 111 is for sale at 4.2 ETH. I think it would fit you. By the way, my favorite NFTs are fast food punks. Someone's selling a goddamn ape fast food punk for 2 ETH. No, they're not selling. It is listed. Motherfucker. Hmm. That person's crazy. This could be interesting. Who the hell sells an ape fast food punk for 2.3 ETH? What the fuck? Okay, I might have to take a look back at that. Yeah, there you go, 19 ETH, 10 ETH, even for the zombie. What the fuck? Hmm. Two apes. Okay, don't look at me right now. Nobody look at me. Don't look at me. I'm looking at NFTs. Okay, don't judge me. These are my favorite NFTs. Um, no, I don't want that. I want to search OpenSea, not my portfolio. Was it the llamas? Is this the only one listed? What am I missing here? Jade Zoro. What the fuck is that? What's it called? All right. I can't. Someone post what the damn NFT collection is called because this is clearly not the llamas collection. Are you still involved in VE Velo relay strategy? No. Cash on the weekly, stack cash. When do you plan on use it to vote and collect some weekly money? I've been doing that for quite some time, my friend. North south, are you still says same question. Interesting. You still same question. Interesting. Stack cash. It's a bull market ish. High cap thoughts on FFX. Already answered that. Bullish on Velo and Superchain. Quite so. So many red flags. Sol V3. Yeah, try one llama. Huh. Did OpenSea do their thing and block a collection for some stupid reason? Huh, that's unfortunate. I don't know. Anywho, Blur Better Place. What is it? Blur dot, I don't remember it. Blur IO. No, I don't want to connect right now. Maybe they list it as the llamas. Looks like it's the case. It's a nice llamas. Rarity. Anything good? No high rarity. Ooh, number 16, number 9. Oh, this is a CRV USD llama. Last sale, they want 4.20 ETH. That's actually really nice. Where was it? Was that number 9? That's a nice one. I don't know. I don't know. The llamas, check out the llamas. Llama staking starts in a few weeks, 20% APR. Oh yes, Beauty Cap, Curve USD Llama. But yeah, folks have been what you said. Oh yeah, 111. Yeah, folks have been saying the llamas will pay staking. Where's the revenue come from? From what the I don't know. I don't know. That's besides the point. NFTs are hard for me to swallow unless they're like dirt cheap, and obviously uh, the fast food punks were relatively dirt cheap when they were acquired. Um, that's just spending. You know, folks spend frivolously so often, and that's what I actually like about Solve. They're so frivolous with their money on Solana. Absolute degen trading fee heaven for Solve. Ironically, is it? No, it's not ironic. The captain. It is very hard for me to spend capital. Oh, look, $50 per llama. I'm not going to buy a $12,000 llama for $50 in revenue. Yeah, well, this is a nice one. This is real. It's representative of something that I actually hold as probably the most bullish goddamn thing I could think of. CRVUSD. When you understand the mechanics of these crypto markets, the way I understand the mechanics of these crypto markets, there's nothing more bullish than these dollars, CRVUSD. It's hard to explain the sentiment. Very hard. There's a 5 million reserve made up of locks, curve, convex, and other assets, also some real world assets. Oh yeah, they did accumulate the treasury from the purchases, so that'll produce revenue if they generate cash flow, which makes sense that they would. That could be interesting. Interesting thoughts. A lot of speculation. I'm not too fond of speculation given global geopolitical conditions. But maybe those geopolitical conditions are always the case, and I overthink things. But who could say that I don't take enough risk? You know, folks from meat space would be like, "What the fuck does this guy own? What kind of risk is he taking?" And risk is all relative. So while the vast majority of humans on this planet would see what I do and say, "What kind of risk is this?" And then we go ahead and talk about, yeah, one llama's got 5 million treasury and they're going to be generating cash flow. And we have a we have an uncanny capacity, ladies and gentlemen, to say not much risk. Meanwhile, risk. So anywho, that's my 2 cents. Thank you for joining me Wednesday, January 15th at 12:43 p.m. 271 people made it to the end of the stream. I appreciate each and every one of you, and we are now a little bit more rational because of it. Stay cool, calm, and collected during the week. Keep an eye on the DXY. Note the inverse correlation is strong. I will see you again on Friday, and we'll check back in on the markets together. Until then.